In this video, we'll cover the methodology that will help you to find the best chart to trade and how to find the right time frame for every instrument. To identify the best places on a chart where to enter and to take the best trades, traders use price action rules. Price action rules help us understand where the market's going to go, where are the key entry points, and what is the high probability setup. Traders use these price action rules not only for scalp trading, but also for swing trading. And because price action rules are universal, we can apply these rules in every single time frame and in every single instrument. Why is this important? Well, because high probability setups, they take time to develop. Everything in price action must align. And traders many times struggle with patience. They're jumping the gun, they're taking setups, they're way too aggressive, or traders are not that experienced yet. And in order to avoid making these mostly mental errors, what traders can do, they can add more instruments to their trading arsenal and they can increase the chances of a high probability setup forming. Because if you observe more instruments and you miss a good high probability setup on one instrument, you're not that bothered with it because you know you got opportunity on other instruments. The high probability setup will form eventually. We are going to cover how to find the best tick chart for every instrument because tick charts offer enhanced symmetry, they provide more details, and we have better insight into market dynamics. How can traders determine the most suitable time frame and implement effective money management strategies tailored to each instrument? This is what we're going to cover in this video. So now that I decided the type of instrument that I want to incorporate into my trading arsenal, where am I going to start? Which chart to pick? Your first objective that you need to understand is that you want to trade a chart that offers plenty of trading opportunities, but the chart is not too fast for you to make bad decisions, or it is almost impossible to execute right trades, or that there are fake outs. So every trader's objective is to identify the right time frame that offers plenty of opportunities, but it's not too fast or not too slow. Because if a chart is way too slow, you're going to be waiting a very long time for a high probability setup. Now, higher time frames are good to identify the overall bias, and they are good for mainly swing traders, but you need to adjust to bigger stops, bigger targets, and you have to understand there are fewer opportunities. You need to understand that the chart you're going to select needs to fit your individual personality and your trading style. You need to be comfortable with the chart you're going to be trading. On the right, you can see we have 2000 tick chart for the ES and we have 10,000 tick chart for the ES. 10,000 tick chart, as you can see, looks good, is symmetrical, key entry points are easy to find, but it offers low amount of trading opportunities and it's mainly used for higher time frame analysis. The 2000 tick chart for ES is the perfect time frame that scalpers use because it offers a lot of opportunities to trade. It is a perfect balance, but there are not too many fake outs and it's not moving too fast, so it is hard for us to execute our trading decisions. And this is the goal for a trader, to have a chart that offers good enough opportunities, but it's not too fast so it is impossible to execute correctly or there's too much clutter and noise on the chart. For this reason, you should avoid really trading a time frame that is less than 1 minute because there's so much noise. It is very hard to execute trades properly. It is moving too fast, you're going to be making mental errors, and there can be a lot of fake outs. How to select the most useful chart? Every single time I want to find the best tick chart for a new instrument that I want to trade, the number one step is I need to find a tick chart that is most similar to 1 minute chart, because 1 minute chart is an optimal time-based chart for scalping, but I want to find optimal tick chart because time-based charts are not as symmetrical and they don't provide as many details. So we have 1 minute chart for the GC futures example. Market moves in pairs of twos, and I'm going to randomly plot 1000 tick chart. I need to start from somewhere. Now, my goal is to find a tick chart that is similar to 1 minute chart. And the step 2 is I'm going to be applying price action rules and I'm going to be looking for symmetry. I'm looking for key levels. I'm looking for if there is enough high probability setups and if there is enough bars overall. So I'm going to be taking a look around these areas because I see a lot of clutter here, a lot of clutter here, and I want to see some nice probability setup at the key entry point following the price action rules. So I'm looking for symmetry, I'm looking if there's enough bars, and I want to see if there are high probability setups or not and how many of those high priority setups are there. Market moves in pairs of twos. Now, the 1000 tick chart looks okay, but if I'm going to analyze the amount of bars, you can see low amount of bars on the chart. Not that many trading opportunities. If I'm going to select the 500 tick chart, I'm going to go a little bit lower, decrease the tick chart number. You can see, okay, now we're talking a little bit more similar to 1 minute chart. You can see more bars, more trading opportunities. Why, for example, there is no lower high here? I want to see some little pullback. So this is what I'm looking for. I want to find key levels, key entry points. I'm looking for high probability setups. I'm looking for the amount of bars. I want my tick chart to be similar to 1 minute chart. If the chart contains low amount of bars with very few high probability setups, I will lower the number of ticks. On the other hand, if the chart contains many price moves and a lot of fake outs, I will increase the number of ticks. So the 500 chart looks optimal for the GC example. Step 5, watch the chart for several days and confirm if you're comfortable and compatible with it. You want to backtest it. You want to check multiple days to truly see if there are a lot of trading opportunities, if it's not too fast or too slow. Apply this to any other instrument. Next instrument. I want to add the CL, for example, to my trading arsenal. So I'm going to start with 200 tick chart. But this tick chart, as I can see, has a lot of bars on the chart and has a lot of fake outs. It is very hard to follow. It is printing too fast. It has a lot of small congestions. I have no time to make the right decision. All the bars are forming very fast when I'm watching this live. This is extreme scalping, and this is not what I want to trade because there are a lot of fake outs, a lot of noise. It is very hard to trade, and this tick chart is simply too small. I want to trade a chart that will get rid of the fake outs, and I have time to make trading decisions. I have time to place orders on the chart, and I can analyze the chart properly. So I'm going to increase the number of ticks. Let's say I'm going to go to 1000 tick chart, still the CL. Now this price action looks solid. It is easy to follow. I can identify the key entry point, but when I analyze this chart closely, I have very few entries, very few high probability setups. I have a lot of first entries. I have very few second entries, very few high lows, very few failed second entries. This chart is good for a higher time frame, but I don't have that many opportunities. Every single time I see a lot of first entries and I see entries far from the EMA, this chart feels way too big because I'll be waiting a whole day for just one setup. So now 200 tick chart is too fast and 1000 tick chart is too small. So I need to find the medium. I'm going to lower my tick chart. I'm going to go to 750 tick chart. Okay, solid price action, still easy to follow, decent amount of setups, but it still feels a little bit slow. Now this chart is already good to trade, but I'm going to ask myself a question. If I miss a setup, are there other trades? And by the way, I'm not doing this only for one day. I'm backtesting several days so I can fine tune the best tick chart. And I can see that there are not as many setups in case I'm going to miss another setup. And if I'm going to lower it just a little bit, just a tad to 500 tick chart, this is the best tick chart to trade. Easy price action, it is symmetrical, there are no fake outs, no congestions, I can make decisions in time. It is also offering me plenty of trading opportunities, so I don't have to sit here the entire day waiting for a few setups. Enough time to make decision. So 500 tick chart for the CL, that's the optimal chart. So these are the steps that I'm going to do if I want to find the optimal tick chart. You don't want to trade chart that is too small, a lot of fake outs, too much noise, hard to make decisions, but the chart that is too big is also not ideal if you are an intraday trader and you want to find several setups, not just very few. So this is the best optimal tick chart. And here we have, for example, the Nasdaq. As you can see at the bottom, 1 minute chart, 1500 tick chart looks very similar to 1 minute chart. It offers more details, market insights, and it is more symmetrical. So this is how we're going to find the best tick chart. We're going to start with the 1 minute chart. You're going to be tweaking the number of ticks and you're going to be looking for optimal tick chart. Looking for price action rules if they're being followed. You're looking for symmetry and you're looking for the areas if there are high probability setups or not. A lot of beginner traders, they want to start trading micro futures, not regular futures, because they want to make sure they're not going to blow their trading capital while they are in their developing stage. And this is very smart. So in order for me to identify the right tick chart for micro futures, we're going to apply very similar steps. But the number one, we're not going to look for 1 minute chart. No, you're going to select the main regular chart for the regular ES instrument you want to follow using micro futures. So for example, we're going to use the ES 2000 tick chart and 1500 Nasdaq. So these are the main charts we use for intraday scalping. So if I want to find the best, the optimal micro future MES or MNQ tick chart, I want to find a tick chart that is similar to 2000 ES and 1500 tick charts. So once again, I'm gonna tweak these tick charts. I'm gonna look for the ideal number, and as you can see, MES 950 tick chart is very similar to 2000, and MNQ 2500 tick chart is very similar to 1500 tick chart. So in that way, I can trade the micro futures by being very similar to regular futures charts. Once again, increase or lower the amount of ticks if you want to find the best chart. Watch it for several days and make sure if you are comfortable and compatible with it. We chose the instrument, we found the best tick chart, and now the last question is, how do I figure out the proper money management strategy? And do I have to adjust price action rules to each instrument? You don't. Price action rules work exactly the same on every single instrument. There is no adjustment you need to do. You will still apply the very same price action rules, but you need to adjust slightly your risk to reward and your money management strategy. So for ES, the main target profit we use for scalping is, let's say, around 8 to 10 tick. That's the scalper's profit. 8 to 10 tick scalper's profit is quite similar to 1-to-1 risk to reward, slightly less. The bars on average are a little bit bigger, so that's already a clue that you need to understand if you want to find the best money management and risk to reward on other instruments. So what are the steps? If you want to find the best risk to reward ratio and you want to trade position size that is similar to how we trade the ES, what you have to do is you're gonna plot the other instrument, the selected tick chart, and you're gonna measure the average size of the bar. You can even use the ATR indicator, but you can also do it manually. You're gonna select many days and you're gonna back test and see how big those signal bars are for the high probability setups, because you want to start at first from 1-to-1 risk to reward ratio. So you're gonna go to a new instrument. You're going to look how big the average bar size is, and that will help you to understand what's gonna be your target profit for each new instrument. So for example, we're gonna take a look at the CL, and if I want to understand what's gonna be the optimal scalping target profit, I'm gonna take a look and I'm gonna measure the bar size of high probability setups, because I want to understand what the average stop loss is going to be. So I have 10 ticks here, 17 ticks, 19, 9, 24, that's a little bit too big, 16, 19, 14, and 10. And this CL was a little bit more volatile than normal. These are much bigger than normal they are, because for example, other day is a little bit slower, 10 ticks, 11, 12, 8, and 7. So I want to find a good average number for optimal scalping position. So you can already see and eyeball it. It's going to be around, let's say, 15, 14 ticks. So every single time I want to find the optimal scalper's target profit for each new instrument, I'm going to measure the signal bar size, because I want to find what is the average size of the signal bar. I want to know how big the stop loss is going to be. I want to find a target profit at first. It's going to be similar to 1-to-1 risk to reward, and then I'm going to make it slightly lower than 1-to-1, just like ES, because on ES as we trade, 8 to 10 ticks is just slightly lower than 1-to-1. You're going to observe market volatility, and for the CL 500 tick chart, for example, optimal target profit is 10, 12, 14 ticks, around that, and for NASDAQ 1500 tick chart, it's going to be 10, 12, 14 points, around that. You don't have to follow this perfectly to the T. There is absolutely no problem if you will tweak this number a little bit. You will increase it a little bit more or decrease it a little bit more. It is around this number. For the ES, we use this guideline based on the ATR to adjust our target profit based on the market's volatility and how fast it is. If you don't want this headache, you can simply make your initial scalp being 1-to-1 risk to reward ratio. Only problem with that is that sometimes the signal bar is going to be way too big and your target profit may be way too big, and it's not going to be a scalper's target profit. It may be much bigger. But going 1-to-1 risk to reward ratio on most trades is definitely a valid strategy as well, before you're going to find the best scalper's profit, or you can just use the 1-to-1 risk to reward ratio the whole time. And no matter what, your stop loss always goes 1 tick above the signal bar when selling and 1 tick below the signal bar when buying on every single time frame and instrument you're trading. If you're going to add more instruments and more charts to trade, make sure you're going to test it first to see if you're not being too overwhelmed, if you're not missing setups, and don't overdo it. It's just an idea that can help you to look for more high probability setups in case the market is very slow. Make sure you're going to test it and it fits your trading style and personality. Good luck with your trading.